guys, Eli here, and I found out that the stock market usually goes up over time.
Duh. I mean, have you been living under a rock?
Which essentially means that we may see a lot of red days, but generally over time, there should be more green days than red days as far as the markets. So within the past 3 months, I decided to do some research as far as my portfolio and see how many green days I have and how many red days I had. And I also tracked the way I felt mentally and emotionally. And I'm going to share the results with you guys today. And make sure you guys stick around to the end because I'm going to share with you guys how all my portfolios did as far as the market within the past week. That's stocks, crypto, gold, and silver. And we're starting now. If you guys love to talk about personal finance and mindset and you want to help support the Urban Lifestyle channel, start now by hitting that subscribe button, hit that notification icon so you guys get future notifications of my future videos. And to all my thumbs up squad, make sure you guys show up on this video and smash the like button. It's really helpful in getting this video out to more eyeballs. And make sure you guys comment your thoughts down in the comments below. And while you're at it, make sure you guys check down the description below so you guys can take advantage of some awesome free resources. So within the past 3 months, like I said, I've been doing research on my portfolio itself, my psyche, how I think, or how I feel when I'm experiencing a green day and how I feel when I'm experiencing a red day. Now, of course, I'm pretty sure I'm going to be speaking for the majority of people when I say, hey, yeah, I really enjoy the green days. And as far as the red days, I have to have some sort of mental toughness. Gotta have some thick skin for this one. So all in all, within the past 3 months, when I'm looking at my portfolio, I seen that I actually experienced 41 green days in the markets and 19 red days in the markets. Now with that information and the way that I love to invest, that's 41 days where I'm not buying and 19 days where I'm buying. So yes, I don't like to buy when the markets are green, and I love to buy when the markets are red. But psychologically speaking, I feel much more intelligent on the green days. Every time when the stocks I bought are up, I feel like a genius. Feeling like the king of the jungle, like, hey, I can't make no mistakes. And of course, I'm always leveled off on a red day because that's when the doubt starts creeping in.
What if you made a mistake and you lose all your money? Oh my gosh, all your money's gonna go down. Oh man, because you didn't fully do a proper research. How do you know your research was done right in the first place, huh? Look at that. You're losing money today, huh?
So the way I like to view it to make sure I keep my mind on track is I just like to view red days as being days where companies goes on sale. See, I realize that average people and rich people, they think the same way, but at the same time, they think totally different.
Ain't that like an oxymoron?
Average people, they love to buy stuff that are on sale and they get a bargain for it. They just like to buy stuff that devalues over time and pretty much makes them no money. While rich people, they love to buy things that are on sale and get a bargain for it, but in time, whatever they're buying appreciates or pays the dividends and makes them more money in the long term. So I had to change my thinking and realize, hey, listen, whenever the stock market is down, or matter of fact, whenever one of my positions are down, I like to see it as a sell. Hey, I get it more for cheap. And I had to understand that if I buy one stock at just $20 and then the next day it goes back up to 20, I broke even. But if I buy that same stock for $20, then the next day it goes down to 15 and I buy another one at 15 and then it goes back up to $20, now I did not just break even. I actually made a profit. So for me, at the age I'm at right now, I actually welcome red days. It gives me more buying opportunities for the long run. I get to buy more shares for cheap. And it gives me the opportunity to actually grow my wealth more, a little bit cheaper. And on red days, I like to look at a nice quote that I know. The intelligent investor realized that stocks become more risky as the prices rise and less risky as their prices fall. So in turn, I like to buy low with the potential to sell high. So now I want to go over 8 things that you guys should definitely know when dealing with red days or dealing with the stock market in general. Number 1 is time beats timing. We all heard time in the market beats timing the market. A lot of people are sitting on the sideline saying, hey, listen, you know what? The market's going to crash. I'm going to buy in when that happens. But until then, I'm not going to go into the markets. But the thing is, that puts you in a ready, set mindset. Back when I was in elementary schools and the kids were playing jump rope and it was my turn to jump in, I'll be like, ready, set, never actually making a decision to actually jump in versus just, hey, jump in. Of course, with me doing all my research, so the way I like to look at it is I'm a long-term investor. If I like a company and I believe that the company is going to grow within the next 5 to 10 years, hey, I'm in it for the long run. So I'm going to buy the company after I did my research, of course. And if the company's stock price falls in the short term, I'm gonna buy more. And I'm not gonna time the bottom for the company because, hey, I'm not a psychic and I can't predict that. Now, number 2 is continuous research. It's not just research, it's continuous research. Do you think Warren Buffett, when he bought Coca-Cola stock back in the 1980s, he did his research, he never looked the company up again? I'm pretty sure he reads all the 10K reports, all the 10Q reports, and make sure he knows everything about that company, what's going on with that company, because, hey, he has a huge chunk of money invested into Coca-Cola. So if I'm buying a stock, the research I did in the beginning, I'm continuously doing throughout the whole span of me owning that stock. Because, hey, the reason I wanted to buy that company in the first place, the company may change their whole entire fundamentals where I don't even want to be in that company anymore. So always make sure you do your continuous research, and that leads us to number 3, having a level mind. Yes, we all know the stock market doesn't just rise up all the time. There's going to be some times where you have some down days, and there's going to be some times where you doubt in yourself and doubt in the research you did. So all I can say is don't panic, see what's going on with the company, and hey, if you still love the company, buy more at a cheaper price. Now, number 4 is very important. Like, guys, really listen. This is the most important one, guys. And that is making sure you guys smash that thumbs up button. Like, honestly, like that's so important. Make sure you guys hit that like button. Yeah, that's the word. Make sure you guys hit that smash. And if you haven't already, hit that smash. What? Anyway, hit that like button. And if you guys haven't already, make sure you guys subscribe to the channel. Number 5, when you're looking at a company, always look 5 to 10 years out. Don't look at what they're doing now. Look at, hey, where this company's gonna be 5 to 10 years from now. Now, if you're a day trader and a swing trader, this may be a little bit hard because you're actually making decisions based off the short term. But I figured out it's harder to figure out stuff that's gonna happen next week or a month from now, but it's easier to predict things with companies when you're looking 5 to 10 years out into the future. Number 6, and this is more for myself, if I am selling at a loss, I'm gonna turn that loss into a win. One stock I own, I sold at a loss because the company's vision is not in line with where I thought the company was gonna go. But hey, yes, I sold at a loss, but there is something that came out of it. Taxes. Now, of course, I have businesses that I do make money from, so I can always tell the tax man that, yeah, I know I made this much money here, but I also lost this much money here, which means I can use it as a tax write-off. So that's a win for me. And number 7, understanding that you haven't lost until you sell. Now, that's pretty much self-explanatory, so I'm not going to go in too much on that. Guys, like I said before, thank you so much for watching. Make sure you guys hit that thumbs up, smash that subscribe button, and make sure you guys have a beautiful day.